Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, April 25th. Not a lot going on today. We just got the weekly jobless claims for economic news releases, and last week it was reporting on 355,000 people applying for unemployment. So the forecast for today was 351,000, so they figured it would be in that same range, and actually dropped down to 339. So obviously good news right there, as fewer people are applying for unemployment. So we'll go head over to the headline news and base stock markets up. So based on the news of the some of the earnings reports that are still being brought out, as well as the weekly jobless claims, the stock market's like are actually doing well right now. Now the big number we're going to be looking for tomorrow is will be the big news for the week is the GDP number. So that's gonna be we're going to start the first quarter. So remember, we'll have like three revisions, and the final one coming in June. So the first one will come out tomorrow for the first quarter GDP, and we'll have to see if we're showing any expansion or if it's contracting, where we lie in terms of the GDP number. So stay tuned for tomorrow for that. But right now, we'll go ahead and take a look at the bond market, see what interest rates are doing. Currently, we're down for the day. So far, we're about 6 basis points, which brings us down to 104.19, where we closed at 104.25 yesterday. Again, we've been kind of going the size pattern. There's not a whole lot of changing in the pricing. These are very minimal in terms of pricing what we're looking at. So really no price change from where we left off yesterday, as it's not large enough to really to make a big difference in there, and still kind of going this floating range. But tomorrow, be cautious, because we do have room for us to actually drop. If I expressed yesterday, we've been kind of a sharp incline of the bond market for the past about month here, a few weeks, and that's not really sustainable long term. So we could have a short term correction here. Tomorrow could be that news. We don't know yet, but that could be that news where if we have a decent GDP number, it could adversely affect the bond market, where we could have go for the worse and get pricing worsening in the pricing. So short term, we could get worse pricing before we get long term better pricing, because obviously we want to kind of steadily grow, and it'll be longer sustained. All right, folks. So rates are where we left off yesterday. No problem right there. We'll leave it short and sweet for you folks. You guys have a wonderful day. We'll see you guys tomorrow. Thanks for watching.